Welcome to TradeTheMBA.com. This is John's reports for the 19th. And we had the continuation of the bullish move. No shock with any of that. We've been in a strong magenta over yellow here on the MBI readings, and there's been no short activity in the white MBI rate here. It's been consistently below. And every time there's a little bit of a build, that's just the fuel that creates a short exchange. We are getting into an excess period that can be sustained for a little bit of time, but as we build positive extremes, they're going to get some fill back in there. But again, the 76% is more likely to be a case where we see active support. From the NASDAQ standpoint, a little bit more severe. When you come down here onto the extremes and look at them, they start at the initial point of this breakout here in that 14.7. So that would be a likely location for pullback status if we get down towards the 76%. But overall, it's been pretty darn strong, and you just now breached enough with the short activity that you have additional fuel, at least from a NASDAQ standpoint. So it continues to drive shorts to cover, and that's been fueling this the whole way through. Every time there's been a brief breakup of shorts, it has happened where there's still plenty of excess cash for buying, and that's been enough to fuel it. It's been counter to what a lot of people have thought, that the market was going to fade and things like that, and so that viewpoint really just, I wouldn't say suckered a lot of people, but it just confused them to the point where they were positioned incorrectly. From a TLT, another one, TLT, people driving into treasuries, lowering the yield. That was not sustainable because the Fed's not changing their position on rates, and of course comes back down, and that's just a given. And it's amazing that people don't get it, but it's okay. When they can't see it and we can, that makes it easier for us. Oil maintaining its middle range here between that 70 and 75 range has been fairly comfortable, unless we see some kind of extreme build in crude in that. Probably not going to break down too much, and as long as there's not any new developments on the OPEC side or war issue, it's going to probably just continue along. And I don't know if it's quite the Goldilocks range. I think you need to be a little lower for it to be in the Goldilocks range, but it's enough to prevent inflation from continuing to press. And where you've already had the increase in price, you're just going to have a sustained movement of that, and that just should be enough to keep things unhappy but not horrible, and that's kind of the thing. The ECB had to raise rates to keep the hemorrhage from the euro going through, and that's been enough to push it back up. Is that going to be enough for the EU to be able to sustain that rate increase? We're going to see. They were already teetering. They may not be able to, but it was enough to keep the hemorrhage from the euro, because prior to that, what was the point of being in the euro? There was just zero reason, and so this was literally the U.S. central bank couldn't sustain it forever, and having to bump rates was enough to at least pull some capital back into the EU, and that gave it move back up. So now they're back in a comfort zone, and they really don't have to worry about that near term. So that stave that off. Will it damage the EU economy? Potentially. Is it a positive for the S&P? Absolutely, because a lot of earnings come from the European sector on that, and with the positive exchange, it just helps the balance sheet just a little bit. Just a little bit. Every little bit helps. Gold's not going to do a whole lot of much, but it's also not going to collapse. I think we were seeing more softness out of cryptos in that, simply because of continued uncertainty. And there's no real new impetus to drive anything yet. This was a matter of just filling back into this positive extremes back here. Closed out weaker hands again. It was just enough to do that. Look at positive readings here from an MBI, but are we expecting anything significant? No. You'd have to have some kind of other additional crisis develop to really give a spark that might motivate people to want to jump in en masse. But for now, there's nothing with the market moving where it is. Capital wants to go to where the yield is, and right now the yield is still with stocks, and that particularly in the NASDAQ with the strongest move. And you can see here from a 50K standpoint, it took that beautiful long and got out of it there, and then kind of flipped to the short side of it. But it could turn around here as we see the magenta starting to take over the MBI on that. So we'll see if that MBI white's able to maintain that. In worst case, you're looking at moving back towards that 50% range, which would fill in the little bit of positive extreme that we had that was right about there, which has already kind of taken place where the initial start of the short took place. So it already is kind of taking care of that one from a broader stroke. So everything's been pretty healthy. And even from an intraday standpoint, we had a little bit of softness to start. They built it right back up, took it to that position from the previous close high, and bumped it just a little bit before there was some late day profit taking. And that's sort of where we're at here in the post market containment of that. All in all, fairly easy stuff. I don't think there's anything dramatic happening. I think the ranges still intraday are going to be the most effective. The fact that we've had some of these decent upside moves, good to collect some decent runs on them and just keep doing that over and over. It's the easiest approach to it. Just follow the readings. So for now, we're just the status quo until things start to develop, and I would expect that probably going to see a continuation of more elevated volatility. Now, when I say volatility, it's just, yeah, you're seeing large spikes, but you may also see some pretty significant pullbacks within them, and it's that kind of range that's going to shake out a lot of weak hands. So it's going to be one of those where you just got to stick with the readings that are and not presuppose where things can go, because I think we're going to have a dynamic move throughout the next couple of weeks at least, until we get some clarity as to whether there's a continued drag on the economy. And if there's not, then I think that there's still more upside potential to all of this. As always, though, trade well. Look for me in the Skype chat. Have a good one.